Hello everyone, welcome to smart-money.trade. Let's continue with our daily Nifty analysis. So yesterday Nifty did gap up as we can see, but then it pulled back. Where it pulled back, it was exactly as we mentioned that we're not gonna chase the gap up, we're gonna have it pull back and then we're gonna ride up. Why did Nifty stop here? What is this level important? We had discussed all those in yesterday's video and it played out exactly the same way. So let's just quickly apply our indicator smart money lines and see what the levels are suggesting for today's trade. All right, there you go. So quick look at the trend. We had like bearish on daily, weekly, couple days back, but since the Nifty has been pulling up, daily kind of turned on into bullish, weekly is neutral, monthly is neutral. So overall trend I would say is still neutral. We are not aggressive into the buys. So what do we look today for the levels? Again, so yeah, just to give a recap, this is exactly the same levels at 17,230 to 240. We had mentioned that if Nifty hits that, it would be a pretty good resistance, and because it's a confluence of lines, and we would be looking to exit our trade which we had entered at this point of here. So yeah, it did gap up, kind of a pullback. We added our position to here on this law, and we rode all the way till here, and we exited our trade, which we entered here and here, because this was a confluence lines, and we were pretty sure that it might not go down, but it might at least consolidate, and we don't want to carry unnecessary overnight trade. So yeah, our trade has been done. We got entry here, we added here, and then we exited here. So what do we expect now tomorrow? Again, SGX is suggesting a gap down around like 16,900. So yeah, somewhere around here it's suggesting this is our kind of a most important level which we have been suggesting in our videos. This is a solid support as of today. Let's see if market respect that level again or if it wanna break. I would just like to tell you one thing, guys. The more it hits that support, there are high chances that it's gonna break it. Yes, the more you hit, it's not that it takes support at that level. No, the more you hit something, it eventually breaks that. So I am thinking third time is gonna be a charm for bears. 1, 2, 3, boom. The levels are gonna go ugly. We had discussed this before. If we break this decisively on a 1 hour time frame, and if we don't immediately go into that level, we're gonna see ugly price action into coming weeks, which can be around 16,400 to, yep, 16,500. Levels are getting pretty worse as we gap up and gap down on a daily basis, like 200, 300 points. But yeah, so those are our levels that are suggesting if we open up here around 900, if we don't take support, and this time since it's like pretty third time, I wouldn't even be playing on a 15-minute time frame. I would be going into actually a 1 hour time frame. So you don't want to think that, oh, 15-minute support is a support. No, market is pretty volatile. US markets sell off pretty hard, so we want to be very careful before we go long, and since the trend is also neutral. So yeah, open here, see how it handles the situation over here. Maybe a couple of points down, it might try to do a stop loss hunt where it tries to, like, get rid of longs which are like weak hands, we say, and then try to pull back in, but you never know. So if that happens, watch on an hourly time frame the reversal. If we kind of start taking support, if we see a doji or if we see a hammer around this level, then yes, we will get into a long trade again for our targets of like 230, or like even this time to start with like 17,100. Eventual targets can be 17,500, but those are very optimistic. I mean, like, the market has to go really into bull trend to achieve these levels. But yeah, what are we looking at right now? Levels are pretty much clear using our smart money lines. Open here, if we don't take support, we're gonna go down. We're not gonna chase it, but yes, once it comes here or here, it will or it might come back to retest this level. That's when we actually go short, and then we ride the trend down. We're not going to open the opening gap down. No, we never chase any open downs or gap up. We're going to see how it behaves with our smart money levels, and then only we're going to enter. So anything opening here as SGS is suggesting, let's see how it plays around this level, stabilizes or not. If not, let it go down, let it come back for a pullback. That's when you enter your short for a best risk reward. and then you ride the trend. If it comes back and retest and then it crosses on a 1 hour time frame, then you can easily exit for a small loss. But yeah, only short on a retest of this level from a downside to up and then continue down trend. If we take a support and start riding up, then this would be a very hard stop, and that would be on a 15-minute time frame. Yes, on a long we want to keep a very strict stop loss on a 15-minute time frame and then eventually start riding our trend. So levels are pretty much clear. I hope you guys are liking our analysis. If you like, please subscribe to our channel and send those likes. Thank you.